The following case, which presents a very common scenario among inexperienced traders, is a good example of how greed makes people behave arrogantly. When you feel arrogant, you always want more than it's reasonable to expect at the moment. And on the other hand, you can't accept a situation when things do not go your way and you start losing. In some way, people fall in love with their opinions and ideas, so they refuse to consider the possibility that they are actually wrong or that the circumstances have changed. Look at this typical small trader, let's call him X. He opens a trade and it goes strongly against him. He decides to wait for it to come back to the break-even point before selling it. That, instead of re-evaluating the market, see if there might be a good reason for that decrease and consider closing the trade, or at least some of it. There might be a strong change in the trend, but he keeps his position open obsessively because he doesn't want to accept a loss. By doing that, he exceeds all the rules of his strategies, he loses the chance to get into better trades, and he might risk his entire account because in case it will continue going against him, his capital eventually will be erased. On the other hand, again, he plans to sell at his entry point in order to guarantee he loses nothing, but at the same time, he would not earn anything as well. If you are not convinced that this mindset is not rational, think about this case in a different point of view. Here, the price moved a bit and trader X has the opportunity to close his position with a minor loss of only $10. But he is not able to do so psychologically. He actually prefers to keep the losing trade open, risking literally his whole account, just because he cannot stand seeing a little minus. He wants it first to get to the break-even point. So basically we can say that from this point, he can on one hand earn $10, and on the other hand, he can lose all of his money. Sound reasonable to you? I'm sure it doesn't. We didn't get to the money management section yet, but you probably already understand that having a risk reward of 10 to 300 is a very bad idea. And the second part of this example is to show you how fear can come into play with the same person and a small change. So after losing his money because of greed, our Mr. X is now giving himself another chance. He deposits money again and begins. He opens a trade and sets a profit target of $300. Fortunately, this time the trade goes well. But when the trade reaches the point where the profit is $50, Mr. X suddenly feels the fear coming. He remembers how the market went against him last time and caused him losing $300 in only one trade. It's then when he should be a little bit greedy and go with the target he sets ahead due to his strategy parameters, but instead he decides to close the trade with a profit of only $50. That, while most chances are that if the trade was going against him, he would let it go down to zero, just as happened to him before. Again, his action involves with a poor risk-reward ratio of 50 to 300 and a clearly negative expectancy. So in this case, it is the fear which is the emotion that led him to act in a destructive way. Those two examples of Mr. X might sound ridiculous to you, but there's a good reason I chose them. Believe it or not, but the fact is that most of the people behave in a similar way in this type of situations. And that's one of the reasons that the majority of them eventually lose in day trading. Now that you are aware of it, you can learn what you should never do and focus on how to really trade well. In the next video, I'll tell you what are the things you should be focused on and what is the right mindset you should have when approaching trading.